The government have announced changes to how the stage 3 tax cuts will work. I'm going to jump right into explaining how they affect you, but stick around to the end because I'm going to explain how you can use these to your advantage. So these were the current tax rates, these are the proposed changes, and this is what was originally proposed. So you will see that there is a difference between what was initially proposed, which was brought in by the Liberal government when they first announced that there was going to be tax cuts, to what Labor are now saying is going to be the actual stage 3 tax cuts. Now the one thing I want people to remember is this will be a change to your withholding and it will start from 1st of July. So this isn't going to be an extra refund that you get at the end of the year. Instead, this will be a change to your withholding each week. So you'll see these benefits start to happen from 1st of July 2024, but don't expect that the 24-25 or even the 23-24 that you're going to receive this large tax refund, because that is not what this is about. So let's have a look at what has actually been proposed. So the new proposal is that we will have 0 to 18,200, no tax. That is going to be the exact same as it currently is. We will then have a 16% tax rate on each dollar earned between 18,201 and 45,000. We'll then have a 30-cent tax rate on each dollar earned between 45,000 and 135,000. We'll then have a 37-cent tax rate on each dollar earned between 135 and 190,000, and then the 45-cent tax rate for anything over 190,000. So we're still going to have the same amount of tax rates. It's just going to be slightly different amounts that they apply to. Now, do keep in mind that all these tax rates do not include the Medicare levy. So for most people, the Medicare levy will be 2% on top of these. So that would make the 30% tax bracket really a 32% tax bracket. Now, what were these changes going to be when Labor first announced it? So let's have a look, and they were going for a more basic system. So they were going the same for 0 to 18,200 with no tax, 19 cents from 18,200 to 45. So these two were actually the exact same as what our current tax rates are. Then their changes were going to be a flat 30% between 45 and 200, and then 45% for anything over 200. So theirs was going to be much similar because we're actually going to get rid of the 37 cent completely, but theirs wasn't going to benefit anyone earning up to 45,000. And that leads perfectly into comparing, well, how do people actually compare? Who's actually better off and who's worse off? So you'll see this handy little table here, and you'll see at varying rates that some people are going to be better off and then some people will be worse off. And the magic numbers are around about 145,000. So if you earn less than that, you're better off under these new proposed changes. If you earn more than that, you're worse off. So what they've tried to do here is bring in something that's going to benefit everyone, even though it's not benefiting everyone as much as it might have previously, but it's also going to benefit some people more. And I guess that's just typical politics, trying to work out where they're going to get more votes from. So what are my actual thoughts on this? Well, it doesn't surprise me that they made changes. We do have a bit of a perception here in Australia that people that are earning large amounts of money should pay lots of tax, even though we do have genuine bracket creep, where what people thought was a wealthy income before maybe is more middle class than what people actually realise. And this is one of the biggest issues, is that governments will use tax rate cuts as a way to try and get votes, rather than just bringing in indexation of our tax brackets, which would then completely eliminate bracket creep. It's very frustrating that we don't have this system in place, but instead we have things like this where we have dramatic changes every few years to try and win votes over. So I think it is good though that everyone is getting some kind of benefit from this. I think that is well needed in the current economic situation, but I think it is a shame for some of, especially some of my higher income earners, they're not going to get that same benefit that they were promised. But I guess, again, that's politics with broken promises. Now, before I get into how you can actually use these changes to plan out your current income and your future income and use that to your advantage, I actually talked about this first on my newsletter, and I'd love for you to join it. The link is in the description. On the newsletter, I'm putting out free tax tips every single week to you guys. So it would mean the world to me if you could head over and jump on that. Now let's get into talking about tax planning and how you can utilize this announcement to make sure that you're maximizing your tax position over the next 2 years. So in general, when we have a situation like this where next year's tax rates are going to be slightly lower than this year's, we want to try and push income out to the next year. Now that is easier said than done, but especially if you're a business owner, you could take a smaller wage in this year, or maybe not increase your wage in this financial year and push out those increases into next year where you're going to pay a slightly lower rate of tax on this. Now, this might not be possible, obviously, if you're earning a normal wage, but maybe you're considering selling an investment, maybe it's a property, or maybe it's some shares, or maybe it's some crypto that you've made large gains on, and you know you're going to have a capital gain and therefore increase your taxable income. Well, maybe you're going to delay that sale till after 30th of June, push it into the next financial year, where again, you can take advantage of these lower tax rates. Something else to consider is super contributions. So if you're planning on making super contributions, you want to weigh up what's the benefit in this current financial year versus what's the benefit in a future financial year. That is just another part of making a decision when it comes to super contributions that you really need to do your own research in. It just always pays to be aware of your overall financial position in every single year so that you can plan accordingly to try and maximize your tax position by just taking advantage of understanding your income. Now, as I discussed with these tax changes, it doesn't mean that we're going to get large tax refunds, which means you could end up with a tax bill. But what actually happens if you get a tax bill? Well, in this upcoming video, I talk all about what happens if you owe tax. When is it actually due? How do you pay it? And can you get an extension? I hope to see you over there.